What's going on, everyone? I'm back with another video. Today is actually my first day back in the market. As you guys know, we were closed on Monday for MLK Day, and yesterday I was feeling a little bit under the weather, but I'm back today and I'm back with a beautiful play with JD, making a quick $2,000 in profit in the first 8 minutes of the market open. With that being said, let's go ahead and jump right into the video and recap this trade. Starting the week with a redemption play in JD, finally catching the early morning breakout and making a quick profit of $2,000. The reason that I saw potential in this stock is because yesterday it sold off aggressively. I think it dropped about 7%. And the reason being is that JD and a lot of Chinese companies right now are all extremely volatile and they are all extremely reactive to headline news. So what was the news yesterday? The news were detailing the economic slowdown in China that was discussed at the World Economic Forum. And the reason that I thought that it was overblown is because if you look at the 1 year, 1 day chart, these stocks have been selling off aggressively this last year. And so I think that the price points that they're at right now are already taking into play the positioning of the Chinese economy. And with that being said, let's take a closer look at the 10-day, 10-minute chart. After the sell-off, the reason that I saw potential is because at the market close yesterday, it started to push up and then this morning gapped up as well. And so what I did is that I waited for it to break above today's resistance, today's pre-market resistance, which was here at $22.15. And what I wanted to see going into the market open was because it had gapped up so much during the pre-market and aftermarket hours. So as you can see here, the previous day it closed, gapped up, pushed up some more during pre-market hours today. I wanted to see a small pullback. However, I wanted it to still make a higher low, which it did here, making a higher low than here. This was the low during the pre-market hours, making a higher low during the market open, and then bam, volume kicking in, breaking above that resistance, picking up my call here and selling it. Unfortunately, not getting filled at the top of this candle, which is where I wanted to get filled, and having to get filled around here. So making around $2,000 in profit, actually $2,000 exactly in profit. And the reason that I knew that I was going to expect resistance here is because a common rule of thumb that a lot of traders use is that the previous day's resistance will be the following day's the previous day's support will be the following day's resistance. With that being said, if you look at the previous day, this is where the support was found, and so that's where the resistance was found for the following day. So I wanted to get rid of my shares here. Furthermore, looking at the 10-day, 10-minute chart, this pink line, which represents the 200-day simple moving average, has acted as a form of resistance as well. And so I knew that going into this early morning breakout that I was going to expect to see some level of resistance along this line. And so that's why I wanted to get rid of my shares a little bit below that line, because you don't ever want to hold your shares to the point where you expect resistance. You always want to sell it a little bit before, because sometimes sellers do get spooked, or rather buyers get spooked and sellers will quickly overcome them. So you do wherever you plan on exiting, or wherever you expect resistance, just make sure that you get out a little bit earlier. It's better to make sure that you go ahead and lock in those profits than let greed get the best of you and make you hold a position for too long. With that being said, you do also want to hold your winners. And in my opinion, I think that my exit would have been perfect. Unfortunately, like I said, it was moving so quickly during the first few minutes of the market open, missing that exit and having to sell during the pullback. So let's go ahead and look at my Robinhood. Buying 200 call contracts at 48 cents, totaling $9,600, and then selling those contracts immediately after 8 minutes for a profit of $2,000, $9,600 to $11,600. So nice quick play, really happy about that. You guys know that I've been trading JD the last week, and I missed a lot of the big breakouts, especially this one right here. But cashing that nice little one did make me really happy today. And so after I sold my call, I went ahead and bought a put position near the top or near the high of day, because like I said, looking at the 10-day 10-minute chart, I did expect a level of resistance along this pink line right here, and that's exactly what happened. So I ended up buying my puts very, very close to the high of day, selling off. And let's go ahead and look at where I'm standing right now in that position. JD, I have 30 contracts in puts, and I'm currently up $820, which is 65% return on my investment or in my principal. And I do plan on selling these very early in the market open, because I expect that this is going to push up in the early hours of the market open as well, just as we saw today. And the reason that I think that is because if you can see here, it is starting to push up and make higher highs, higher lows during the aftermarket hours. And if we continue to see this pattern during the pre-market hours, I do expect it to push up to the previous high, which was around $22.55. And this is just a common pattern that we've seen with JD. As you can see here, having resistance along this pink line, selling off, but then finding support, pushing up, and then retesting that high. So that's exactly what I expect to see tomorrow, and that's why I bought my put, to try to make a quick buck by selling it and make, what is this, roughly, this is 1.5%, so it'll be about 15 to 20% return for my put, which is totally fine, because I did go ahead and hedge this put with a call. So I initially wanted to buy more call options, but I wanted to go ahead and buy some puts just as a form of insurance for those calls. And as you can see here, I do have, one moment, JD right here. Let me see. So I have 20 contracts in JD with an expiration date of the 1st of February, strike price at $21, and then I have another one that has a strike price of $21.50 and has the same expiration date. So a total of $4,680 in calls, and then a roughly $1,800 in puts. $2,000 in puts. So, like I said, I bought the put as a form of insurance just in case this doesn't go accordingly, and I went ahead and bought my calls towards the low of day. Let's go ahead and look at the 1-day, 1-minute chart. What I saw is that I was finding support here, making higher lows, and so I ended up buying most of my calls around this level here at $21.84. And like I said, I'm going to do the exact same thing that I did today in the morning, which is get rid of those shares, or those contracts, literally in the first few minutes of the market open. So that recaps my JD trade. So let's go ahead and move into Goldman Sachs. I bought a couple of put contracts against Goldman Sachs. The reason being is that I think it's fairly overbought at this moment. And what I did like seeing is that it started making lower highs and lower lows. So as you can see here, the previous low was here. One moment. Previous low was here, making a lower low here, and then a lower low here. Let's take a closer look. 10-day, 10-minute. Pushed up, sold off, right? Found support here, which was the previous day support, as you can see. Tried to push up, gets rejected by these blue EMAs, which, as you can see, have previously served as the levels of support. So like I said, previous day support is the new day's or the next day's resistance, and that's exactly what we saw. So I loved seeing that. This was yesterday and I traded it today. So finding resistance, selling off, finding resistance, selling off. And so what I did is I waited for it to break below the support, the last level of support that it had, broke below that support, picked up my contracts, and I'm currently down in that position because, as you can see, where I bought it at, it's currently above that. It's currently above the price that I bought it at. So I bought it at $195, roughly $195.9 per share, which in put contracts was $1.92. So I'm down $1,700 right now in my position, but I do think that this is going to sell off tomorrow, and hopefully I will make roughly $3,000 in profit tomorrow, and along with the JD trade, hoping to make around $4,000 in profit tomorrow. So I will keep you guys posted on that. Like I said, the reason that I traded Goldman Sachs is because I think that it's overbought. It's making lower lows and lower highs. And so looking at the 10-day 5-minute chart, as you can see, this pink line served as a level of support as well, right? And so moving forward to where we are right now, it's looking to be a new level of resistance. And so that's what I really like to see. And that's why I really encourage, or one tip that I would suggest, is to always make sure that you're looking at multiple time frames when you are doing your technical analysis, just to confirm that the trend that you're seeing is correct. And yeah, I think this trade will go well, and I will keep you guys posted. Hopefully we have another green day tomorrow and make a good amount of profit. But yeah, thanks so much for tuning back in. I hope this was helpful, and I will see you guys in the next one.